Hi everyone, I'm Laura Anderson with Your Certain Real Estate and Coaching. I wanted to come on today actually and talk about real estate as an essential service. Some of you may not have thought about this before, but we are in unprecedented times and there's a lot of up and down on what could be happening in our economy and in our market. Real estate, at the end of the day, we all need somewhere to live. So real estate deemed as essential service has some opportunities. So I am also securities licensed. My first love is finances. My real job before I got into real estate or real estate investing has actually been bookkeeping, tax preparation, and financial services. So I certainly come from that side of life of where we can bring in securities, bring in investments, bring in real estate investment, where oftentimes it's either one or the other. You'll have people who are totally invest in real estate or totally invest in the stock market. I like to diversify. And so looking at that in these opportunities would be a chance for me to share with you a little bit today. My world comes from that finance world. I grew up with the rule of 72, with looking at interest, understanding compounding interest, ensuring that we were balancing and that we reviewed our budgets even as young children. So that was an opportunity that I've been given. So that's the world that I've come in, and definitely I'm anything but budgets and boring, but always available to provide that support. That's a huge value in the real estate piece as well, because when running real estate as a business and running that, especially even more now than in any other time, to ensuring that you understand your costs, that you understand where you're landing with all of that. What I wanted to do today was have some fun, I hope, and share a little bit of a market comparison between mutual funds and real estate. And again, it's not about one being right or wrong than the other. I believe in diversification. I have both. I want to see multi-sources of investments for everyone, for you to meet your own personal goals and plans. So this is just an opportunity to share a little bit in the market right now and look at what could be deemed as generally as high risk in real estate, on maybe changing the angle on that to take a look at where we might actually see some great opportunities in a market where things are down, where there is some, fear. We know that the market's volatile. We know that our investments have dropped that are in the market. And so with that, what can we do to maybe hedge that through real estate, through investing further, but keeping with our plans? So with the right financial support and plan, and this is something I'm certainly available to do for you, we can actually make money during these times of turmoil. We can take advantage of these opportunities where things are on sale. And if anyone's met me, I love to buy on sale, especially if it's shoes. But I'm pretty open to houses as well, and funds. If I can get things that's what I was always taught was, you've only lost money if you sell. And if you can get it on sale, then you're going to make more money. Simple stuff, I hope. So I'm just going to share my screen and we'll go through some numbers, because I'm definitely shared that I'm a numbers girl. And that is my first love. So just a really, really high level, real estate versus mutual fund. I was just having some fun today. Yes, I'm sorry, this is what I do for fun. I'm just taking, and this is without bottom dropping, okay? Let's just take on an average day, an average balanced mutual fund, and what that's going to do in the market for 10 years. And I've got that comparing to our real estate deal. So the type of deal that we purchase with ourselves or with investors every day. So this is an actual deal, and I'll actually show you the deal on the next slide. So when you're looking at that growth, very simple, all day long, I love to pull out my calculators to compounding interest to take a look at what that growth is going to be. So essentially understanding your rule of 72, understanding how to divide down to see how long it's going to take you to double your money. So in the case of 5%, you're looking at a growth of about 62,000 over 10 years. Now that doesn't take in volatile market, a fluctuation. It doesn't take into account market going up and down. It is not guaranteed. And of course, keep in mind, these are all estimated projections. Doing that same thing in real estate, however, I believe has more control. So many will say real estate is higher risk, and there's reasons for that. People buy the wrong property. People don't have the expertise. They don't have a team in place. They don't know how to manage it properly. And so this is strictly based on our managed portfolio that we can ensure to look after. Now with that, We factored in amounts for vacancy. We factored in amounts for maintenance. It, again, is based on buying the right property with the right support, which is something that we can definitely help you with. With that, though, we can see that same 100,000 increase because you have a special little secret sauce. We buy for cash flow, so we're going to base this at a 5% cash flow, same as the mutual fund, but we get mortgage pay down now. So now the tenant is also paying down our mortgage. So I brought that at 10%. I usually add a 2% market appreciation. I haven't even included that on this, let alone getting into what any renos or development could do to increase forced appreciation. So just on a very, very basic line, and this is based on a 50% ownership in the joint venture. Virtually secure in the sense that we factored in all of what we consider to be the volatility in the real estate end of things. Now, if you sell in a down market, it doesn't matter if it's a mutual fund or a real estate investment. If you sell when it's down, you will lose the money. If you don't sell and you hold, again, keeping in mind that these things have been set properly with your plan. I'm not saying keep everything. Definitely make sure and check in with your advisor. By all means, connect with me. I'm offering free support to just do a general financial review for anyone at this time. But look at your growth estimate. Look at the difference that 10% is going to do. That's mortgage pay down and cash flow. I get excited about this. I don't know if it excites you, but if you're on here or watching, hopefully you have some interest in real estate. So what we do in an everyday deal, essentially we are cash flow investors in Calgary. That is what we do all day long. This is what my husband and I do. We currently have 25 doors for the most part in Calgary, all cash flowing. And I know my numbers. I know my neighborhoods and my areas that we invest in. We manage them. We look after them ourselves. My husband is luckily handy because I am not, so we can do that other portion as well. So this is my everyday deal. I can buy this property all day long. I'm actually super excited that I might buy this property now at what, $30,000 less. So opportunities in the market on both sides when we can buy on sale, rather that's real estate or a mutual fund. With this though, looking at how I've kind of separated some of the pieces and some of the costs. When you're looking at what I can remove in potential soft costs, because we include the property management, so that's why that's greatly reduced. So what you're really just seeing there is a vacancy rate, which is equated to 1 month vacant a year. I'm proud to say that we've been at a 0 vacancy rate, but I still factor it in the dollars. And repairs, we also can come in a lot less, because thankfully my husband's handy. With that, we're looking at a 50% ownership, you're looking at $300 to $500 cash flow per month. We pay that out quarterly to our investors. I think this is an exciting number. I know that people show this number and will increase different levels to show what your appreciation in the market's going to be when you sell it. I'm showing you this number straight on cash and mortgage pay down, which I consider to be as close to guaranteed as we can get. Now, I obviously have to have the disclaimer on that nothing is guaranteed in the world. Things in life can happen. But for me, this is the strongest bet that we can do because I'm a real estate expert. So in the opportunity of working with me, we have that opportunity where you can make this kind of money in real estate without the level of risk. The biggest value I find in real estate investing, and I'll close my screen because I could overwhelm you with numbers later. I'm happy to send it out. I'm happy to send information and offers out afterwards. So just stop the share, but really what I'm encouraging is if you've had any interest in real estate, you want to learn more, please reach out at this time and I'm happy to share it. I'm happy to support you. And really my offer is coming with a review of your financial place, getting a plan for your family. There's no charge for that. That's just automatic. Let's make sure everybody's in the right space that they need to be. And then where do you really want to go? What are your goals and dreams? Because it's not real estate or a mutual fund. It's what that money is going to do for you. So what is that piece and what the opportunity that we've had in how can I help you build stronger towards your goals and maybe the opportunity to be able to have some passive income that can take some of the fear out of these experiences. I'm Laura again with Your Certain Real Estate, and I will send out my information. Please join me and receive more information. And I'm again happy to help and work with you. Have a super day.